Japan's SoftBank Group is back in the black. The investment giant has reported a bumper $7.7 billion in quarterly profit, powered by its global bets in startups, including startups in India. The recent IPO frenzy in India has added to its fortunes. For instance, a $400 million investment in First Cry is now worth $1.2 billion. Similarly, it's $600 million in Ola Electric, now worth over $1 billion. And more recently, Swiggy has delivered a premium on listing day. Interestingly, Swiggy was SoftBank's first bet in the Indian food delivery space when it invested $450 million in 2021. Today, that is worth nearly $1 billion. That's not all. SoftBank is also betting big on Off Business, which is also planning $1 billion IPO. Joining me now to discuss SoftBank's India bet and the road ahead is the investment fund's managing partner for India, Juneja. Many thanks for joining us. Just a few minutes ago, you were at the NSE with Harsha listing Swiggy. What a day it's turned out to be. But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shereen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion+ of GMV, when you're touching 100 million+ consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong. And that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk. But let's talk about the competitive landscape. Of course, you talked about Zomato, and of course Zomato with Blinkit. The quick commerce wars. I mean, forget food delivery. Let's talk about the quick commerce wars, and you brought up Zepto as well. Significant amount of cash that Adit and team have been able to raise recently. How does the competitive landscape stack up, and do you believe that we're heading back into the era of more burn?
So, we've seen this story before, right? We saw it in e-commerce, we saw it in food delivery. When there is a strong product market fit, when the TAM is big, competitors will come. And honestly, yes, it might be initially some burn, but I do think that competitive dynamics then brings out the best in everyone. right? Do I think Swiggy and Zomato are better companies today because it was competitive? I think they are. And eventually they had to win it and get the unit economics right.
Did you see the tweet that Zomato tweeted this morning with a heart for Swiggy?
Yes, no, for sure. And
is that love for real?
No, I think that love's for real. And I think if you go back, and that's a separate question, but if you go back from 2014-15 onwards, I think Deepinder and Harsha have had a great dynamic. They've been competitive, but they've also, both of them have created a massive market, a lot of employment. And really for you and me as urban consumers or even rural consumers, it's been a real joy to have them as apps on our phones. On the grocery market, I think that TAM is exceptionally big. I think the question often gets asked, oh, it's not worked anywhere else in the world, why will it work in India? We don't have modern retail. We don't have the convenience retail. We don't have 7-Eleven. Urban infrastructure is not ideal for you to go out and pick up stuff on your way back from work. You put those dynamics together, you also have a much lower delivery cost vis-a-vis what you can charge the customer. And if you put those dynamics together, I think it just becomes a very, very strong proposition.
But, is there room for more than three? I mean, we currently have Zomato, Blinkit, Swiggy, Instamart and Zepto. But now everybody else seems to want to get into the game. Big Basket's trying to do 10-minute deliveries as well. The big boys haven't quite gotten into the game yet, but pilots are on. I mean, is there room for more than three?
So my view always is, theoretically, the TAM is big enough. We're playing the grocery market, which is probably 5 to 10x the size of the food delivery market. So can there be more players? Yes. But we've seen this across, I think, any industry, whether it be broadband, whether it be telecom, whether it be e-commerce. Players will come and go. I'm sure more and more players will come, but it takes a lot of capital and it takes an immense amount of execution, both on the ground and very, very good high-quality tech teams. So I would say a lot of people might enter, but very quickly there'll be only a couple who will actually be able to take advantage.
But on the execution challenge, and that really will boil down to who succeeds in this market. And we've seen some fabulous stuff being done by everybody in the game, whether it's Blinkit or Swiggy and Zepto as well. What do you foresee as the big execution risks as we build scale?
The big execution risk, I think, is twofold. One is you just have to get the consumers to order more and more. You will at certain points start capping out with your prime urban consumers. So you have to convince other people who are not, double income, working, to also use the platform. You will have to go beyond tier 1 cities like food delivery has. And most importantly, you'll have to get the FMCG companies to play ball with you and get some margin from that business.
The regulatory risk. And, we've seen the government sort of talk about the fact that quick commerce needs to get its act together in terms of playing fair. We need to create a level playing field. There's also been issues with, other regulators, the Consumer Protection Authority, for instance. The regulatory risk, how real is that? How much of that are you factoring in?
No, I think, look, in any, and this is across the world, this is not a question for India. Any market which rapidly grows, the regulation and the market speed are not always in sync. Our view is that if you are playing fair, if the regulation is not helping one particular company and it's equal for all, there will be a meeting of minds between the product market fit and the company and the regulator. We saw this in cabs, we saw this in food delivery, we saw this in e-commerce, and I'm sure there will be a level playing field or understanding between the regulator and the companies of what the right regulations and what their right barriers are.
So you're not overtly perturbed about?
I'm not.
No?
I'm not. I think all of them are playing with the same sets of rules. I think this government is very pro Startup India. I think there are a lot of employment being generated. They have to play by the rules, and I think between the government and the companies, they'll find a happy medium.
One of the other aspects of this quick commerce story and the way that it's playing out in India is that it has changed consumer expectation on gratification and fulfillment. How much of disruption do you believe that is going to cause, not just for quick commerce companies or companies that are competing in that space, but overall as consumer expectations change?
I think consumer expectations are changing so rapidly, and I think we're just going to get spoiled further and further because technology is going to make it easier for us to get everything a snap of a finger. I don't want to watch TV anymore because I don't want to see adverts. I only want to watch it on demand. It used to be 10 minutes, maybe 15 minutes. E-commerce used to be one-day delivery. Why should I wait for that? I want it in 4 hours. So I just think we're going to get more and more spoiled. And I actually think that's really, really exciting, because it's a challenge for Swiggy, Zomato, Blinkit, Zepto. And us as consumers will just, get it better and better.